Hey guys, Jared Wesley here of LiveTraders and back for another educational lecture. This week's topic, guys, is breaking down a chart. We are going to dig deep into a chart. And the reason is I see a lot of traders out there taking patterns that I guess by definition is a pattern, but it's not a good pattern. So for example, when you look at a buy setup, you can have two lower highs and two lower lows and you're in an uptrend, and technically that's a buy setup, okay? But there's a vast difference between some buy setups. So we're gonna take a look at a chart today and we're gonna break this chart down, okay? And there are 5 different entries on this chart. They're all buy setup entries, but we're going to rate them, and you're going to see that, yes, even though all of them are technically buy setups, some of them are complete garbage. They're not even very good. So this is where newer traders and even some experienced traders get themselves in trouble because they're simply looking at the basics. They're not digging deeper and looking, what is the picture really telling me? Just because you're in an uptrend and just because you have 2 lower lows, 2 lower highs, it doesn't mean it's a good buy setup. So this chart you're going to see is very fascinating because of the 5 buy setups, they're worlds apart. Some of them are really good and some of them are really bad, but a lot of you guys would take every single one of them, and that's not what you want to do. Remember, and I say this in the video, guys, your job as a trader is to find reasons not to take the trade. You're looking for reasons not to take trades, okay? Your goal as a trader is to take only the very best of the best, okay? You should have a checklist for must-haves, like-to-haves, reasons to take a trade, sure, but they should jump at the page. After you go through the reasons to take the trade, then look at the list of reasons not to take the trade. And if that list of reasons is significant, you shouldn't take the trade. Stop the FOMO, guys, the fear of missing out. There's always another trade, and I've said this towards the end of the video, and I mean this, guys. Look, your job as a trader is to make money. It's actually not to trade, all right? Trading is simply those charts that you see there. That's the vehicle we use to make money. Like FedEx uses real vehicles to make money. We use charts to make money, okay? So your job is to make money. It's not to push the button, push the button, push the button, and take crappy trades, okay? And that's the problem many of you are having. You're just pushing the button because of FOMO, and what happens? You're digging yourself such a big hole that by the time you get to a good trade and make money, you're not really making money because you're still digging yourself out of the hole that you made for yourself, right? You lose 3-4 trades on Monday and you fight the whole rest of the week just to get back to break even. That is not good trading. So that's why I thought it would be a good idea today to take a look at one chart, okay, and break it down 5 different trades, okay, all the same pattern on the same chart, just different times, and show you guys the good versus the bad and really dig deep. It's about 45 minutes long. I hope you guys enjoy it. I apologize, guys. I'm recovering from a little bit of a cold, so if I sound a little strange, I apologize. But anyway, guys, the goal, remember, is to make money. It's not to push the button or take trades. We just use charts as the vehicle to make that money. And you really shouldn't be taking more than maybe 2 or 3 trades a day on average, maybe 50 trades a month. For those of you guys out there taking 10, 20 trades a day, just stop, okay? There's no reason to do that. And on some days, you shouldn't be taking any trades, right? And I say this in the video too, and then we'll wind it up and we'll get to it, is that of 5-day week, right? There's 5 trading days in a week. You're going to have 2 days where you can really hit it good, right? Make good money and hammer it good. You're going to have 1 day that's absolute crap, just garbage, and you might even lose money on that day. And then you're going to have the 2 other days, all right? Those are the kind of the flex days, I call them. Days where you might make a little, days where you might lose a little. Your job, guys, everybody makes money on the 2 good days. Your job is on the bad day and the 2 flex days, 3 days of the week, is to stay out of trouble. Let the 2 really good days ride you and guide you. The other days, sure, you might make money, but stay out of trouble on those days. You guys are just gunslinging, FOMOing it out, all this crap. Stop. This is a real hard business. It's a genuinely challenging business, and you make it harder on yourself when you do foolish things. So I hope you guys enjoy this lecture on breaking down a chart. All right, I think there's a lot of valuable information in there. I'm Jared Wesley of LiveTraders. Let's get to it, guys. So breaking down a chart, how to determine a quality pattern, guys, is what we're going to talk about today. And what this basically is we're going to take a look at one chart, and this chart has anywhere from 4 to 5 potential trades on it. But as we know, all trades are not created equally. So we're going to break it down and kind of look at which of these 4 or 5 patterns are the best and why they're the best or not the best, which ones you should trade, which ones you shouldn't trade. And as I always commonly say in the chat room, you should be looking for reasons not to take a trade. Not for all the reasons to take a trade. That should be immediately obvious to you. You should be looking for all the reasons not to take a trade. And one of the ways you can do this is build a specific checklist for the trades that you're taking. Have the criteria in order. In Trading Plan Essentials, I talk about must-haves and like-to-haves. So you have to determine how many of those must-haves and like-to-haves that you need to have in order to take the trade. Okay, I am a believer in being slightly more conservative rather than being aggressive. And I understand that sometimes those aggressive trades work and they work quickly and they work well, but I'm a believer in being a little bit more conservative when it comes to taking your trades. All right, so what I'm going to do first, guys, is just go over briefly as a quick refresher what we talked about recently here. All right, and that's transitions and trend line breaks. I'm only going to spend a couple minutes on this just because this is going to help us with the chart that we're going to be looking at. All right, so we talked here recently about having a trend line break, what that means, how it's just a warning sign, it's not an action event. And then we talk about when it breaks the moving average, that's another warning sign, it's not an action event. And then we put in the retest and failure, which is basically a double bottom. But the key here is you don't want the retest and failure to put in a new low. You absolutely don't want it to put in a new low. So again, that's still a warning sign. All those things are just saying to you, you know what? There's a good chance the stock is pivoting and likely transitioning from a downtrend to a double bottom stage 1, potentially into an early stage 2 uptrend. Okay, so we covered all this before. This is nothing new. I was in more depth and detail the last time we covered it, but this is something that we want to keep in mind because we're going to be looking at this. And then obviously if you can get some of the extra pattern boosters like bottoming tails, volume spikes, how many bars down it is an extended move on the downtrend, all those things are going to add to whether or not this stock is likely to pivot at the bottom. Remember, the double bottom area that we talked about, the retest and failure, is a warning sign. Sometimes it can be an action event on like a parabolic or a climactic move, but most of the time, this double bottom area is not an area in which you really want to buy a stock. You want to wait for it, confirmation. All right, extra confirmation is always good, okay? So this, for example, is an example of a trend line break. There's no moving average on here where the stock moves up, pulls back, retests the low here, but doesn't put in a new low and then goes higher. And we talked about whether or not this is a good or a bad 3-bar play and then the move back up. So this is just a real chart. But this isn't the chart that I want to look at. So now that we've had a brief refresher on trend line breaks, retest and failures, and so on and so forth, let's dig into the actual chart I want to look at. And it's this chart right here, okay? I want to take a look at this, and we're going to look at this on the next 5 slides, basically, all right? Just this chart, okay? And there's a lot going on here. At first glance, you look and go, oh, that's sweet. But there's more to it than just that. Okay, so this is what it looks like without anything on it, because you guys might want to go back and reference this later and kind of mark it up yourself. I've marked it up for you as we go along, but you might want just the empty chart to mark up for yourselves. And I'm also, and I think I said this a couple weeks ago, is that I think it's a good idea, guys, just as a training technique, to take a piece of paper and put it over the future of the chart. All right, so let's say you're talking about this double bottom right here, right? Just hypothetical, this double bottom. Take a piece of paper and hide the future, the entire future, because you don't want to know what happens. You want to be able to accurately make decisions in real time, because in real time, you don't know what the future holds. Okay, nobody has that crystal ball. So by not having the future, it makes these decisions a bit more challenging. When you know what the future is, it makes the decision so easy. So cover the future with a piece of paper, and I think it'll help you. And then go bar by bar and slowly, reveal the future and see what happens, okay? So here's this chart. Now I marked up 1, 2, 3, 4, 5 potential entries here. Okay, I don't know why this red line's here, but whatever. 5 potential entries here. good trades versus bad trades, and we're going to kind of, in some ways, rate these trades, and we're going to talk about these trades, okay? So let's take a look. We're going to start the first one and obviously work our way up through number 5, and then we're going to sit here when we're done and kind of pick out, of these 5 trades, which one is the best and why. That's the key. Why is it the best trade, and which one is the best trade? And of these 5, how many of them would you have actually taken, right? How many would you have actually taken? All right, so let's start here. Now, I've given you the entry prices. These are accurate entry prices based off the chart, okay, of all of these. So you can see over here on the left, this is our double bottom retest. And again, we're going to get into talking about it in just a second. But the entry would be 27.47, right? A penny over this area. The stop loss would be roughly, I might be off a penny on this one, but 27.36. Okay, and your first target would be the prior pivot high, because that's the first target for all buy setups or retests. And that first target is 27.64. And the second target would be the next pivot, which would be 27.90. I'm doing this for you guys so that right off the bat, you can take a look at the risk to reward. Okay, so we have an 11-cent stop loss, and the first target's about 17 cents. So you have about 1.5 to 1 to the first target, which is, reasonable. All right, and then to the second target, you have about a 43-cent target on 11-cent stop. So about almost 4 to 1, almost. So in terms of risk to reward, I think this passes the sniff test, right? This is okay. But that doesn't make it a great trade just because the risk to reward is acceptable. I did that on purpose, guys. I put that in there on purpose because a lot of you guys, and I get emails about this frequently, you think just because a trade has a good risk to reward, it's worthy of taking. It's not the case. So let's break this one down. So trade number 1, okay? Remember, we're going to look for reasons not to take these things. So I look at a stock right here, and clearly the stock is in a downtrend. Why do I know this? Well, I don't have a lot of information, but the moving average is going lower. And moving averages just don't pivot out of nowhere and randomly go higher, right? There had to be some price action, some prior price action that was trending down. And then it accelerates, wide bar, wide bar, wide bar, pivots, and goes higher. And you can see on this bounce, it's a bit sloppy. Topping tail, doji bar, all right? So it's choppy on the way up. And then it pulls back to here. So the first thing we see here, the first thing I see is, number 1, it put in a new low. Right, you have a pivot low here at like 27.40. This one's like 27.35, technically 36, I suppose. Right, so it puts in a new low, and that's not what we really want to see. Now, again, if it's a peekaboo low, that's fine, but be mindful here, guys. 5 cents, 6 cents, whatever it is on this, on a stock that's not a big mover, might be a decent amount of space. It's not just a little peekaboo below the low here. So that's number 1. I see a breakage, a new low put in. Number 2, I see we're below. We're still below the moving average, right? The moving average is above us here, okay? And if, I don't have it on here, but if we were to draw a trend line, where would it be? Well, it would be right here, right there, right? This would be the starting point. That would be the second connector there, and you would have a trend line right there. So you would still be below the trend line and below the moving average, okay? So you're already starting off on a tough spot. So what are the 3 negatives here? It put in a new low. It's below the moving average. It's below the trend line, okay? So I'm looking at this and I'm going, that's enough for me to not want to take this trade. Okay, yes, it has a doji bar. Yes, it has a bottoming tail. Yes, some of you are going to say, oh, it's a retest. But remember, guys, hear me out here for a second. We've already determined, and I don't have a lot of prior information, we've already determined the stock's in a downtrend. Who are you to say, and how are you to know that this isn't just a lower high? This is a lower low here on the left, lower low, lower high, and then this is just another lower low. Maybe it pivots right here and keeps going lower. The truth is, you have no idea, right? This is a lower low right here on the left. This is a lower high right here, and this is a lower low. It may just pivot right up to there, possibly, and then just go lower. Well, that's a real possibility. So, where does that leave us? trade number one. In my opinion, it leaves us in a spot that you can't take this. It's far too aggressive. There's just too many things wrong with it. But some of you will ultimately take this because you ego trade. You need to be right. You have to be the first person in this trade. The answer to both of those is no, you don't. No, you don't. Okay, your job's to make money. Your job isn't to be the first person in a trade. Your job is to make money. Okay, so this is a tough trade to make money on. Now, some of you will say, well, geez, Jared, it worked. This is why I tell you guys, put a piece of paper over the future. Because if you do that, you're not going to know if it worked or not. You're going to have to go bar by bar. And that big topping tail and all this. So anyway, for me, trade number one, yeah, garbage. Like I would literally go as far as saying junk. Okay? Not even in the wheelhouse, not close. Doesn't matter what the risk to reward is. So this one, and I'll probably just put a graphic on there. Do not trade. Do not trade. Okay, let's go to trade number two. Okay, what do we have? Same chart. Okay, so now we're looking over here at a potential entry at 27.58 and a potential stop loss at 27.51. So we have a 7-cent stop loss. Our first target area, okay, is the prior pivot high, which is right where this red line is, by the way. And that red line happens to be $27.68. So about a 10-cent target. So about 1.5 to 1, 1.4 to 1, close to 1.5 to 1, okay? Second target is still 27.90, which happens to be what? About a 32-cent target, which on a 7-cent stop loss is over 4 to 1, 4.5 to 1. So in terms of risk to reward, we can check the box. Now let's talk about the actual pattern. Okay, so let's get a little bit of participation in here and see what you guys think about this one. Okay, so what do you guys think? What would be some of the positives and or negatives about this particular trade if you were to see this trade? So we already talked about this one over here. Okay, and I kind of walked you through it without asking your impression or opinion of it. But now that we've moved up the ladder just a little bit, what do you guys think? Do you guys like this as a buy setup? Do you hate this as a buy setup? And if so, why? Like, what are some of the reasons you might want to take this or might not want to take it? Okay. Above the moving average, breaks the trend line, lower highs, bottoming tail, changing the color bar. Okay, cool. All right. Some people are talking Fibonacci retracement, which I do not use. Okay. All right. Well, let's talk through it because I think a lot of what you guys are saying is actually pretty good. All right. Let's walk through this step by step. Now, for me, guys, all right, I consider, and this is for buy setups and sell setups, I consider the location items the most important part of a buy or sell setup. Okay, and you're going, well, what are they? The location items are this: the retracement level, 50% or so, the moving averages, and what type of support or resistance is to the left. So if we take the prior pivot high, which is this red line here, that's the prior pivot high. That's 27.68, right? If we took the prior pivot, because this technically is a pivot here now, right? It's not down here. If we took that pivot, you're at like, I don't know, 27.45 or so, okay? The retracement level here is a little bit more than 50%, right? You're probably looking at 65% retracement level. So it's a little bit lower potentially than where I'd want it to be, but it's decent. It's not 100% retracement down here. So the retracement level slightly deeper than I'd like, but still good. What's the next location item is moving average? Well, it's right at the moving average. Okay, yeah, peekaboos below, but that's close enough. So that's positive. All right. Well, then we come to look to the left, like Beyonce says, right? Well, what do we have to the left? Not much here, right? Topping tails, bottoming tails, like a really choppy area where there was a tug of war that was fought. Okay, so you could say that there is some support here, but it's not very good support. It's not the kind of support I would be looking for. So you're basically looking at the three location items. You kind of have one good, one bad, and one neutral, right? 65% is like slightly good, but it's not really good.
The moving average is good, but where it's sitting in terms of support is kind of neutral. So there's no definitive answer here when it comes to the location items. Okay. Now let's move deeper. We do have a green bar, right? Lower high, lower high, lower high. We have a green bar. That's positive, right? Buyers are stepping up. We do have a little bit of a bottoming tail. That's positive. Buyers are stepping up. All right. Do we have any kind of appreciable volume spike? No, not really. So we don't have that. Okay. Risk to reward to the first target area is about 1.5 to 1. For me, it's not perfect, but it's good enough, right? And one of the reasons it's good enough for me is I tend to go to break even after 1R on my stop loss. So for me, 1.5 to 1 would be acceptable for the first target. We look at the second target, which is way up here, and now you're at like 4 to 1. So that's, in my opinion, risk to reward is acceptable, good enough. Okay. Now, what about this good old pivot over here to the left? Right, we do have a pivot here, topping tail, red bar, and it pulls back pretty good. Well, in my opinion, this green bar here takes care of this pivot. Right, that wide range green bar broke above that high. Is it significant? No, it's not super significant, but it definitely broke above that pivot, and it's a wide range bar. Okay, so when I take a look at this, it's not perfect. Okay, but it's pretty good. Okay, perfect. Some of you are going, well, what would be perfect, Jared? What would be perfect, guys, if this green bar continued higher or had another green bar up into like the 27.75 area? That would have been really nice. Okay, and then a pullback that stalls right around the 27.60 area, 27.63 area, a little bit above this, maybe a nickel above that. So a perfect trade would have this thing going up to 27.75, pulling back to 27.63, somewhere around there, okay, and giving us the same 7-cent stop loss. Still 1.5 to 1 on the risk to reward, maybe 2 to 1, and then the back target still a good 3 to 1 target. So it didn't pop up quite enough to really take out that pivot the way I would have liked to have seen it. And then the pullback, although not a bad pullback, was a little bit deeper than I'd like to see. But all in all, the only question that matters is, if I saw this, would I take it? The answer is yes, I probably would. All right. I would say this is about a 7.5, maybe an 8 out of 10. Okay. Lower high, lower lows, green bar, bottoming tail at the moving average, retracement levels acceptable but not perfect. There's not a ton of support, but there is a battle over here. So yes, I would say this is decent. That's trade 2. Let's go to trade 3. We're moving up the ladder. Now, what do we have here, guys? Let's put a little line here. Okay, so I'll ask you guys in a minute what you think, but at first, we have an entry at 27.79, okay, on that green bar. We have a stop loss at 27.70, so about a 9-cent stop loss. First target's 27.90 because that's up here right there, okay, so about 11 cents. So yeah, risk to reward is 1.2, 1.3, not the best. And second target is a big question mark. Why? I have no idea what's up to the left. I can't see it. This is where multiple time frame analysis would be very, very helpful if we could pull this off and look at it on a 60-minute or a 15 and see what's up here to the left. But for our purposes, we don't know what that second target area could be. It might be infinity, right? Now let's talk about the trade. What do you guys think about this particular buy setup? Good, bad, great, terrible, crappy? You would love to take it, you would hate to take it, and why? And what are some of the reasons that you might want to take this? I mean, every trade has to be worked through. Some of them are so obvious that, you don't spend a lot of time on it, and other ones you have to really think through them. And guys, one of the reasons I'm doing this lecture is I want you guys to really think about the trades that you're taking. Too many of you guys are just blindly following other people in chat rooms, and you're not understanding what's really happening here. And as I always tell you, if you take a trade that you don't understand, that's akin to gambling. Trading and not understanding the pattern is gambling. I don't care if you think the person you're following is God's greatest gift to mankind and is an incredible trader. It doesn't matter. You don't understand it, which means it's gambling. Okay, so this is why we're going over this, so we can really fully dissect these and appreciate what good versus bad looks like. Okay, so yeah, Alessandro, we're not going to talk about add and reduce because I'm just going to look at these in a vacuum, basically, each one individually. We can talk about the bigger picture later, but right now we're talking about individually here as a new trade. Do you like it? Would you take it? The risk reward is not as good. That is true. Moving average is close by. That's true. Yes, support area is right there. We'll get to that in a second. The retracement level is solid. All right, so let's start with that then. I told you guys just a minute ago that location items are my favorite or most important part of a buy setup. Well, this is the top of the pivot where the green line is. That's the prior pivot low where the, sorry, did I say green line? Where the red line is. The prior high here right there is where the red line is. That's at 27.90. This line down here, okay, is right around 27.51, okay? And when you look at this, this is about a 50% retracement, okay? About a 50% retracement, okay? So when you look at that, location-wise, that's a really good location. You got to give me 1 second here, guys. I apologize. I don't like doing this in the middle. Okay. Sorry about that. Okay. So we have a 50% retracement, which is dead on. Like, that's exactly what you want this thing to be, okay? On top of that, we are where? This bottoming tail is also at the prior pivot high. So what was the ceiling? You guys have heard the term, the floor becomes the ceiling, right? The ceiling becomes the floor. So this was the ceiling before. This was resistance right here. That ceiling, once broken, becomes the floor on the next pullback, right? So resistance, once broken, becomes support on the pullback. It's an important note. Okay, so we have two location items now. We have minor price support or level 2 price support, regardless of whatever you want to call it. You have a roughly 50% retracement, and you also have a moving average that's close enough to say it's in the area. Wow. So we're off to a really good start. The good start is we have all three location items. And if the location items are the most important part of a buy setup, this is a good start. Now we want to add some pattern boosters to this thing. What makes the buy setup better outside of the location items? Well, as some of you have said, we have a bottoming tail. That's fantastic. Why? Because at one point in time, this was a wide range red bar, right? It was a wide range red bar, and it left a bottoming tail. So it only has a narrow body red bar, which means that tail represents buyers. Buyers are stepping up, okay? And on top of the buyer stepping up, that means confirmation. And where are they stepping up? Exactly where you would want them to. Meaning, so far, this is doing exactly what you would want or expect it to do. Because not all trades do what we expect them to do. It's why we have stop losses. We wouldn't need stop losses if everything did what we expected it to do. Okay? All right. So bottoming tail. Good. Narrow body bar. Good. Okay. Volume spike. Later on we get it. I don't think we get it on the entry. We get it later, so I'm not going to call it a volume spike. Okay, now is where we have a problem. Now this to me is highly, and please pay attention here, this to me is highly dependent upon your management. Okay? We have an entry at 27.79, assuming you get a perfect fill. We have a target, a first target at 27.90. So 9-cent stop loss, 11-cent target, right? So when you do the math on that, that's 1.2 to 1. Now, personally, I raise my stop loss to break even at 1 to 1. So if a stock has more than 1 to 1 room, sometimes I'll take it because I know by the time it gets to resistance, I'll be at break even on my stop loss. But for those of you that are doing all or nothing or that don't raise your stop loss, this is not easy. And it's not easy not just because of this pivot, but because it's a double top. This isn't just a pivot, guys. This is a double top pivot. This is where sellers came in over here, and this is where sellers came in over here. And on top of it, you do have a little congestion here. It's not the perfect V top we like to see. you really have a decision to make on this. So, as nice as this trade is, lower highs, lower lows, bottoming tail, rising moving average, minor price support, 50% retracement, narrow body bar, blah, 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 all great. What about the target? This isn't one pivot high. If this was just one pivot, we would expect it to likely break that one pivot. We don't expect stocks to break double tops all the time. Hence the double bottom retest and failure, right? We just talked, and this is one of the reasons I brought this up. We're looking at retest and failure. How do you know this isn't some form of retest and failure? Because it's a double top now. We don't know that. We don't know the future. Why am I spending so much time talking about this? Because the vast majority of you guys are going to do what I just went through and go, wow, moving average, check. 50% retracement, check. Minor support, check. Bottoming tail, check. Narrow body bar, check. I got to take it. I got it because you're trading in vacuums. You're not looking to the left enough, blah, blah, blah. And you're just going to go, oh my gosh, look how good it is. But remember, we look for reasons not to take trades. The reasons to take a trade should jump off the page at you. They should be obvious. The reason not to take this is a very serious reason. It's not one pivot. It's a double top. And in both prior instances, this stock failed at 27.90. We don't know that it's going to get over it. So I look at this and say, if your management goes to break even at 1-to-1, this is an acceptable risk. If your management doesn't do that and you're doing all or nothing, I don't know that I would take this. That's a really challenging decision. You cannot ignore double tops. They're there for a reason. Because sellers came in. We don't know that this is going to break. Right? So this one is a management dependent. For me personally, I would take it because my management allows me to move to break even. Your management might not allow you to do that. That just depends on your trading plan. Okay? So as nice as it is, there is one deal breaker on this thing potentially, and it's the double top. Ultimately, the stock went higher, but you don't know that before you took it. Okay? Let's move on to trade 4. All right. So trade 4, basics. Entry is $28.05. Stop loss is $27.98. It's a 7-cent stop loss. Target 1 is right there, and that's 28.16. I wrote it for you. The reason question marks for target 2 is we don't know. The new high, we don't know. Okay? So when you look at the risk to reward, you have 11 cents on a 7-cent stop. It's about 1.5 to 1. Great, not really. Bad, not really. It's kind of in the middle when it comes to risk to reward. So now, to the peanut gallery. What do you guys think? Is this a really good buy setup? Is this a crappy buy setup? Is this something you would definitely take, you wouldn't take, you're not sure if you would take it, et cetera and so forth. And also, I'm going to move this up because it's in the wrong spot. Put that there just to help you guys out a little bit, okay? That should be right there. Now it's there. Okay? What do you guys think? Check with the larger time frame. Some folks are saying, yes, I would take it. Some say it's too extended. It's got great volume. It definitely has great volume. Okay? What I find fascinating is there's a lot of disagreement here. I would say 50-50, 60-40. Most, I think, slight majority says no, but there's definitely some people that want to take this. Okay? There's definitely some people that want to take this. In fact, some folks have said, great. That's a strong, strong word when we talk about any buy setup, particularly this one. Okay? All right, let's have a gander. So we have a stock that moved up. It's pulled back. And this right here, the green line, would be what? That minor price support area. Okay, that's why I moved this up for a second. So the green line here would represent a 50% retracement almost, right? If we look at the top, which is red, and let me just do this in real time. Let's just paste it, put another one, okay? So I know we have a lot of green lines. You guys are getting all confused and stuff. All right, probably just take this one off for you guys. There we go. Nothing like making adjustments in real time. So the red line is the prior pivot high. This green line is the prior pivot low. This middle green line is minor price support and roughly a 50% retracement, right? So if we talk location items, let's go down the list. Moving average, check, good. Minor price support, no. 50% retracement, no. So 2 out of the 3 are negative. So far, we're not off to a good start, are we? You only get one of the 3 most important things. Now, let's talk about that. We prefer 50% retracements. This is about a 25% retracement. I'm going to say that's about a quarter of the distance for this entire move. What is the problem, and this is right out of Professional Trading Strategies, what is the problem with shallow retracement levels? And I get this all the time with people commenting about certain stuff. What is the problem with shallow retracement levels? Anybody know? What's the problem? Judging by the lack of people commenting, you're not really sure. It's discussed in the course for those of you who have taken it. Yeah, Matt has it. There's just not enough of a resting period. Go run me a marathon. Take a 30-minute break and I need you to run another marathon. That's hard to do. So when we talk about this, too deep of a retracement is a concern because we're worried, why did it take so long for buyers to step it up? That's when there's too deep of a retracement. What took so long for the buyers to show up? Too shallow of a retracement, which is the case here, says the stock likely hasn't rested long enough. Too shallow of a retracement also can be a negative for the risk to reward. Okay, so it's just the main point here is it just hasn't rested long enough. Okay, the other issue that I have here is this stock now has gone from all the, remember, this is just same stock, same chart, has gone from 27.35 all the way up to 28, what is that, 16? It's an 80-cent move on a stock that's not a huge moving stock. It's got 1, 2, 3, 4, 5, 6 bars up, and it does a shallow pullback. Most likely, you peekaboo above and then you roll. Okay? 6 bars up, extended 80-cent move from all the way from the bottom to the top, shallow retracement, steam is running out. Now, some of you are saying, well, it's pivoting on a 25% retracement because it's so strong. Well, it is strong, but it's tired too. All right, and it's about to get slapped. So I'm not nearly as much of a fan of this. Okay, I'm not nearly as much of a fan of this. Now, I have another question for you guys. So to recap briefly, I would not take trade 4. The retracement level is too shallow. There's overlapping bars up top. That is not what you want to see. Guys, you see this pivot higher, this topping tail bar. You see this topping tail bar? Look at that. It's almost at 90% retracement up here. Remember, this was a green bar at one point. This was a green bar. It turned red. Now you have some congestion up here. Sellers are definitely, wanting to creep in here. Buyers are saying, I better take my profits and run. Now, I have another question for you. This is one of those I want you guys to think about questions. Now, I have an arrow that's pointing at 28.05, which technically should be on the green bar. Okay? That entry should technically be on the green bar. All right. Now, did this stock stop you out on that green bar? I did this on purpose, by the way. I tricked you. Okay? On purpose. Did this stock stop out on that green bar? Yes, no, maybe so. Possibly. Not sure. And a lot of folks are saying yes, yes, yes. You know what's also wrong here? Again, this is all purpose to try to get you to think. Why is the stop loss 27.98? I mean, if this is the entry bar, shouldn't the stop loss be the prior bar's low? Isn't that typically what a good buy setup is? Like, if we go to the prior one, this green bar is the entry bar. The stop loss is the prior bar's low, right? If we take a look at this buy setup, this green bar right here is the entry. The stop loss is the prior. Shouldn't the stop loss be that little red bar? Shouldn't it be the low of that red bar? Trying to get you guys to think. So, the answer is it depends. We don't know. I don't know how this bar formed. The only thing I know is a factual statement. Unequivocally factual, no argument. This green bar started where the tip of my cursor is. You see that? I know it's hard to see. You see the tip of my cursor. That green bar started right there. I'm going to say right around $28. That's where it opened. For sure, without question, the green bar opened at 28. Now, isn't it possible, hypothetical, but possible, that it opened here, it moved higher, triggering the entry at 28.05, then came back down and left a little minuscule bottoming tail, and then went back up again? Isn't that possible? It's rhetorical. The answer is yes. It's absolutely possible that this thing, it opened here, that's a fact, it opened here. It goes higher, triggers you in, comes all the way back down to the low, and your stop would be below the little red bar's low. Okay? Comes back down, and then went higher. It's not 50-50, Nico. It could be 99, it could be 100%. We don't know. It's not 50-50. There's nothing. Just, why is it 50-50? We don't know. We just don't know. So then it begs the question, what if, okay, here's the next one. What if it does open here? That's not what if, that's a fact. Where, right there, okay, the tip of my cursor, and moved lower first and then went higher. Well, if that was the case, you have a decision to make because the stock technically broke the prior bar's low. If this were a chat room trade, it would automatically be canceled. Anytime a stock breaks the low, before we get in, we automatically cancel it. Would you still buy it? One, I wouldn't buy this regardless. I don't like this buy setup. It's overly extended, and there are way too many negatives to take this. Remember, you are looking for reasons not to take a trade. There's too many reasons to not take this for me to actually want to take it. Don't take it. But I just want to dig inside the bar and get you guys to think. Because let's be honest, let's move this right here just for fun, just for a second. The tip of where that pink arrow is actually where the bar opens. That's a statistical fact. It opens there. I just don't know if it went lower first and then higher, or if it went higher first and then lower and then higher. More than likely it went lower first and then higher. Probably. Okay? Probably. But we don't know. I only did this on purpose to get you guys to really think about these things and how bars form. I say this frequently, but you need to think in your mind and understand how a bar forms. Now, why is that important? It's important because if you can know how a bar forms, you can know who's in control of the bar. Is it confirmation or is it just extra weakness? Right? When you see a big bottoming tail, that's easy, right? Be like, oh, it used to be red, now it's green. That's easy. All right, but knowing how a bar forms, which is where you would what? Drill down to a lower time frame in this case and look. Gives you that extra confirmation you need, or it might tell you, you know what, this isn't as good as I thought. So, I spent a long time on this particular buy setup, and ultimately the answer is no, don't take it. Regardless of what happened right here, don't take it. I just did that to semi-trick you and try to get you guys to think inside the bar. Okay? And there's one more left. All right, so this is the final potential pattern on this chart. We can't see the future, all right? Don't even technically know if it triggers, but it looks like it does. Entry would be in the 28.11 range, okay? And it would technically be on this little tiny green bar right there. Stop loss is 28.04. Your target would be 28.21, so a 10-cent target. Why is that the target? Because that's the prior pivot high. Okay, and I don't know where target 2 is because, well, it's way up here and there's no pivots. All right, so we have a 7-cent stop loss with a 10-cent target. Well, we're back to that kind of 1.5 to 1 risk to reward. And if you guys noticed, most of these entries were like 7 to 9 cents, and they all had roughly 1.5 to 1 risk to reward. Now, I think there was one that was like 1.2 to 1. My point is risk to reward, they were all very similar. But as we've seen, they're not all equal. Even though the risk to reward was the same, they're not all equal. So let's talk about this one. What do you guys think? Yes? No? Love it? Hate it? Somebody said suicide trading. I like it because I think you're definitely in that realm. And there's a lot to look at on this particular buy setup. We'll get it. What I'd like to see is the vast majority of you guys are saying no, I wouldn't touch it. And I love it because you shouldn't touch it. You just stay away from this with like 1,000-foot pole. Okay, let's talk about why though. So always start with your location items. One, is the moving average here? Nope, it's not. I mean, you're definitely below the moving average at this point. Okay. Are you on any type of support? None. You're not on 50% support. You're not on 100% support. No. Is it a 50% retracement? Arguable, right? The top is here, the bottom is here. It's probably a 60% retracement. So of the three, you have borderline one. You have no moving average. You don't have major support or minor support, level 1 or level 2 support, and you have about a 60% retracement. So we're not really doing so hot on the location items. Now, do we have any bottoming tails? No, we actually have a topping tail. Okay. Risk to reward, it's about the same. Okay. But this is where I want you guys to think about this. Take a look at this pivot high right here, all the way down here. Take a look at this pivot high. That's a significant new high. That's what I call a significant new high. From here up to here. Smooth move, significant high. Next, from this pivot high to this pivot high. Smooth move and significant new high. Okay, see the distance from here to here? Nice. Distance from here to here? Nice. What's the distance from here to here? Like a nickel? What does this tell us? When a stock puts in what I call a weak new high, that's what I call this, a weak new high. What does this tell us? Somebody said weakness. There it is. AAA got it. You're losing momentum. Momentum is slowing is what is the word I was looking for. But you guys got it. Momentum is slowing down. How do we know? Because guess what? Sellers are creeping in sooner and sooner, right? Before, it took a long time for sellers to step up. Buyers were in full control. Even over here, buyers in. Now you're looking at going, well, wait a second. Sellers came in over here at like 28.16. Now they're coming in at 28.21. A nickel higher? Stock's tired, right? It's tired. And you're starting to get a rounding top here. See it here? Topping tail here, topping tail here, bottoming tail, then red bar. Like it's not that perfect V top like you like to see down here. It's like a rounding top. So the fact that it's unable to put in a significant new high and it only has barely one location item. This is as bad of a buy setup as you can take. Now, why am I doing this? I know I've repeated myself, but I'm going to do it again. Because some of you out there will simply say, well, look, lower high, lower high, lower high, lower low, lower low. It's a buy setup, Jared. I'm going to take it. You tell me, Jared, that as long as it has 2 or more higher highs and higher lows and it's in an uptrend, it's a buy setup. Well, by definition, it is a buy setup. It's just not a good one. So I'm going to repeat that. You told me, Jared, if it has 2 or more higher highs and higher lows, okay, lower highs, all right, and higher, like, yeah, lower lows and lower highs, all right? If it has 2 or more and it's in an uptrend, it's a buy setup. Well, it is. I wasn't kidding you. But it's not a good buy setup. This is why we don't just look at buy setups in a vacuum. We have what? pattern boosters, which are bottoming tails, narrow body bars, changing the color bar, location items, support, resistance, all. We have all those things to help us determine if it's worth trading. So by definition, it's a buy setup. It's just a really crappy one. This is an area where new traders fall into the trap because they're not looking at the location items. They're not looking at the weak new high, right? That this stock is slowing down, momentum is slowing, selling pressure is increasing. Yeah, the volume's not that great either, right? So they're not looking at those things. They're just literally going, oh, they're very basic. All right, lower high, lower high, lower high, lower low, lower low. Okay, good. It's a buy setup. It's in an uptrend. I'm good. No. So that brings us to the end in that we looked at 5 of these. Realistically, guys, of the 5 trades, how many would you genuinely take? 1 of them, 2 of them, 3 of them, 4 of them, or 5 of them? Of all 5 of these, how many do you think you should be taking or would be taking? 1 of them, 4 of them, 3 of them, all 5 of them? How many should you be taking? The proper answer, and which most of you got, is 2. There's really only 2 good buy setups on here. Okay? And they're not perfect, but they're good enough to trade. Okay? It's this one over here and this one over here. And again, they're not perfect. The first one is far too aggressive. The 4th one is junk. And the 5th one is just suicide. Okay? But make no mistake about it. Every one of them, by the definition of lower highs and lower lows, is a buy setup. Technically, this one, you could argue, isn't technically a buy setup because it's not in an uptrend and it's technically not really a double bottom. But the other 4, you could argue, oh, it's a transitionary buy setup. Oh, it's a stage 2 buy setup. Now I have multiple higher highs and higher lows. But they're not very good. Okay? So if you saw this chart, you should really only be focused on 1 to 2 of these buy setups. All right? The goal, guys, is to find reasons not to take a trade. You shouldn't really be taking 10, 12, 15 trades a day. You should be focused on like 1 to 4 trades a day. Really, you should be averaging like 2 to 3 trades a day, but choose quality. Sure, some days you might take 5. Some days you might take 1. But I wanted to break this chart down for you guys. And surprisingly, we spent 45 minutes doing this. Because I want you to really dig deep into the charts. And I understand, I understand that the emotions are different when the market bell goes ding, 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 and it's 9:30 and you see a buy setup and you're just going, jumping out of your skin. I got to take it. I got to make money. No, stop. Just stop. Check yourself. You don't have to make money today. You don't. You might not make money today, right? Yesterday we made $8, but we didn't lose money. That's the key. You don't have to make money every day. Your goal is to not dig yourself such a big hole it takes a week to get out of it. Why do I say this to you? Because on a 5-day trading, 1 week, 5-day trading period, not every day is going to be strawberries and cream. You might get 2 nice quality days to trade, 1 crap day to trade, and 2 other days where your job is to stay out of trouble. Okay, I'll repeat it. 5 trading days, 1 week, 2 days where it's like, yep, we're getting it good. 1 day that's just garbage. Probably lose money perhaps that day. And the other 2 days are just stay out of trouble. Maybe make a little, maybe lose a little, but you keep the boat straight, so to speak. Okay? This is a good example of that because you could call this 5 days in a week. This is the day you lose money because you're stupid, right? Number 4 and number 1 are the 2 days where you just want to stay out of trouble. And number 2 and number 3 are the days you take a good trade, right? So just understand, guys, that trading is a challenging business that requires your utmost, fullest attention. You're not here to actually take trades. I want this to be as clear as possible when I finish this up. You are not here to take trades. You are here to make money. Charts are the vehicle we use to make money. FedEx uses trucks to make money. Okay, we use charts to make money. But not all charts are very good. In fact, the vast majority of charts stink. Our goal is to pick the best of them. And some days that means 4 trades, and some days that means 1 or none. And I understand the psychology. I got to make money. No. You make money when the pitch is right down the middle of the plate. When he's got that perfect curveball, you just sit in the bat in your shoulder. And every once in a while, they throw it in the strike zone, and that's a stop out for you. He fooled you. Most of the time, you're just patient. Okay? Does that make sense, guys? There is definitely something to be said for the mantra of missed money is better than lost money. There's definitely something to be said for that. Okay? All right, so that's going to do it, guys, for this particular lecture. I hope you guys enjoyed this one. I know it's only one chart, but I really think we dug deep and got some valuable information out of it. So I hope you guys enjoyed that, and I will catch up with you guys again next time.
To get more great educational content, subscribe to the LiveTraders YouTube channel. This way you'll get email alerts every time I upload a new video.